Welcome once again to our commerce classroom. In this session, we will discuss about accounting treatment of lease. Accounting treatment of lease in the books of lessor and lessee in case of both finance lease and operating lease with the illustrations. We start with leases in the financial statement of lessees. Leases in the financial statement of lessees. Firstly, we start with financial lease. Financial lease. Initial recognition. Initial recognition. At the commencement of lease term, lessees shall recognize financial lease as assets and liabilities in their balance sheet at amounts equal to fair value of the leased property, or if lower, the present value of minimum lease payments, each determined at the inception of the lease. I repeat, initial recognition. At the commencement of the lease term, lessees shall recognize finance leases as assets and liabilities in their balance sheet at amounts equal to their fair value of the leased property, or if lower, present value of minimum lease payments, each determined at the inception of the lease. The discount rate to be used in calculating the present value of minimum lease payments is the interest rate implicit in the lease. If this is not practicable to determine, if not, the lessee's incremental borrowing rates shall be used. I repeat, the discount rate to be used in calculating the present value of minimum lease payments is the interest rate implicit in the lease, if this is practicable to determine. If it is not practicable to determine, the lessee's incremental borrowing rates shall be used. Any initial direct costs of the lessee are added to the amount recognized as an asset. I repeat, any initial direct cost of lessee are added to the amount recognized as an asset. Initial direct costs are often incurred in connection with specific leasing activities such as negotiating and securing leasing arrangements. The cost identified as directly attributable to activities performed by the lessee for a finance lease are added to the amount recognized as an asset. I repeat, the cost identified as directly attributable to the activities performed by the lessee for a finance lease are added to the amount recognized as an asset. Then subsequent measurement. Minimum lease payments shall be apportioned between finance charge and the reduction of the outstanding liability. I repeat, minimum lease payments shall be apportioned between the finance charge and the reduction of the outstanding liability. The finance charge shall be allocated to each period during the lease term so as to produce a constant periodic rate of interest on the remaining balance of the liability. I repeat, the finance charge shall be allocated to each period during the lease term so as to produce a constant periodic rate of interest on the remaining balance of the liability. Then contingent rents shall be charged as expense in the periods in which they are incurred. Contingent rents shall be charged as expenses in the period in which they are incurred. The finance lease gives rise to depreciation expense for depreciable assets as well as finance expenses for each accounting period. The depreciation policy for depreciable assets shall be consistent with that for depreciable assets that are old, and the depreciation recognized shall be calculated in accordance with Ind AS 16 property, plant and equipment and Ind AS 38 intangible assets. If there is no reasonable certainty that the lessee will obtain ownership by the end of the lease term, the asset shall be fully depreciated over the shorter of the lease term and its useful life. These are the things to be considered in subsequent measurement. Then we discuss about disclosures. In the case of finance leases, the lessee should disclose, in addition to requirements of Ind AS 107, for each class of asset, net carrying amount at the end of the reporting period. Then, a reconciliation between the total of future minimum lease payments at the end of the reporting period and their present value. In addition, an entity shall disclose the total of future minimum lease payments at the end of the reporting period and their present value for each of the following periods, not than 1 year, later than 1 year but not later than 5 years, later than 5 years. And thirdly, contingent rents recognized as expense in the period. And then fourthly, the total of future minimum sublease payments expected to be received under non-cancellable subleases at the end of the reporting period, additional debt and further leasing. These are the things to be disclosed. Then we discuss about journal entries in the books of lessee in case of finance lease. Journal entries in the books of lessee in case of finance lease. Our first entry, for recording the leased assets at its fair value or at its present value of total lease payments if less than fair value. I repeat, for recording the leased assets at its fair value or at its present value of total lease payments if less than fair value. Journal entry, leased asset account debtor to lessor's account. Second entry, for recording initial direct cost, if any, in securing leased assets. Entry, leased assets account debtor to bank. Third entry, for recording finance charges at the end of the period. Entry, finance charges account debtor to lessor's account. Fourth journal entry, for period installment payment of lease. Entry, lessor's account debtor to bank account. Fifth journal entry, for recording depreciation on leased assets. Entry, depreciation account debtor to leased assets account. Sixth journal entry, for transferring finance charge and depreciation to profit and loss account. Journal entry, profit and loss account debtor to finance charges account to depreciation account. These are the journal entries required in the books of lessee in case of finance lease. Then we discuss about leases in the finance statement of lessors. Here we discuss about finance lease. Initial recognition. Lessors shall recognize assets held under a finance lease in their balance sheets and present them as a receivable at an amount equal to the net investment in the lease. I repeat, lessors shall recognize assets held under a finance lease in their balance sheets and present them as a receivable at an amount equal to the net investment in the lease. The capital portion of lease rental is the net investment in the lease. I repeat, the capital portion of the lease rental is the net investment in the lease. Then subsequent measurement. The recognition of finance income shall be based on a pattern reflecting a constant periodic rate of return on the lessor's net investment in the finance lease. I repeat, subsequent measurement. The recognition of finance income shall be based on a pattern reflecting a constant periodic rate of return on the lessor's net investment in the finance lease. Then disclosures. Lessors shall, in addition to meeting the requirements of Ind AS 107, disclose the following for finance leases. Firstly, a reconciliation between gross investment in the lease at the end of the reporting period and the present value of minimum lease payments receivable at the end of the reporting period. First point, I repeat, a reconciliation between gross investment in the lease at the end of the reporting period and the present value of minimum lease payments receivable at the end of the reporting period. And then secondly, in addition, an entity shall disclose the gross investment in the lease and the present value of minimum lease payments receivable at the end of the reporting period for each of the following periods, not than 1 year, later than 1 year, but not later than 5 years, later than 5 years. And then thirdly, to disclose unearned finance income. Unearned finance income. And then fourthly, the unguaranteed residual values accruing to the benefit of the lessor. And then fifthly, the accumulated allowances for uncollectible minimum lease payments receivables. And then contingent rents recognized as income in the period. And then lastly, to disclose a general description of the lessor's material leasing arrangement. These are the things to be disclosed in case of finance lease. Then we discuss journal entries in the books of lessor in case of finance lease. Journal entries in the books of lessor in case of finance lease. First entry, to record the finance leased assets as receivables from the lessee. First entry for recording finance leased assets as receivables from the lessee, journal entry. Lessee's account debted to lease sales with the net investment in lease. Second journal entry, to record the initial direct cost incurred by the lessor. Journal entry, lease expense account debted to bank account. Third entry, to record finance charge at the end of the period. Journal entry, lessee's account debted to finance charges account. Then fourth journal entry, to record periodic lease payments received from lessee. Journal entry, bank account debted to lessee's account. These are the journal entries record in the books of lessor in case of finance lease. Then we solve one problem. Our question is this. From the following information, you are required to write journal entries for finance lease in the books of lessee and lessor when financing cost transacted was 14%. Lessor's cost for leased computer rupees 29,000. Fair value of the leased computer at the inception of lease on 1/1/2015 rupees 30,000. The lease term is 4 years. The rental amounts is rupees 17,500, 8,000, 4,000 and 2,250 respectively in these 4 years, payable in advance in every year. The estimated residual value of the computer at the end of the leased term is 5% of the cost of computer to the lessor. The lessee has a right to continue the lease at the end of the aforesaid lease term at a normal rent. The relevant statutory written down value depreciation rate is 40%. This is what our question. Then, firstly we compute present value of lease. For the computation of present value of lease, we provided columns for year, lease payment, discounting factor 40%, and then last column for present value of lease payment. First year is 0 year. The reason, we have to pay the lease in advance every year. So, at the beginning of the year, our lease payment 17,500 we made. Discounting factor 1, present value of lease payment 17,500. Then in first year, lease payment 1,000. First year discounting factor 0.8772. Present value of lease payment 8,000 into 0.8772, that comes to 7,018. Then second year lease payment 4,000. Discounting factor 0.769. Present value of lease payment is equal to 4,000 into 0.769, that comes to 3,076. And in third year, lease payment 2,250, discounting factor 0.675. Present value of lease payment 2,250 into 0.675, that comes to 1,519. And then fourth year, with residual value 1,500, discounting factor 0.592, 1,500 into 0.592, that comes to present value of lease payment 888. Then total of lease payment, that is our gross payment, that is equal to 33,250, and then present value of lease payment then total comes to 30,001. We rounded it to 30,000. The total financial charge is equal to gross payment minus net payment, that is equal to 3,250. Then secondly, we compute financial charge. For the computation of financial charge, we provided columns for year. Second column, fair value of lease liability. Third column, lease payment. Fourth column, finance charge or interest. Then next column for payment towards net investment, and the last column, balance outstanding. In our first column, year, first date 1/1/2015, fair value of lease liability 30,000. Then lease payment on 1/1/2015 17,500. Interest, no interest payable on that one is 1/1/2015. Then payment towards net investment 17,500 fully towards net investment. Then balance outstanding 30,000 minus 17,500, that comes to 12,500. Then on 31st December 2015, interest charge payable 1,715, that is 12,500 into 14%, that comes to 1,715. This 1,750 is included in the lease payment 8,000. So payment towards net investment is equal to 8,000 minus 1,750, 6,250. Balance outstanding 6,250. Then on 31st December 2016, interest payment 875, 6,250 is our outstanding balance. 6,250 into 14%, that comes to 875. This 875 is included in the lease payment we made on 1/1/2017. 4,000 to payment towards net investment is equal to 4,000 minus 875, that is equal to 3,125. Balance outstanding 6,250 minus 3,125, that comes to 3,125. Then on 31st December 2017, interest comes to 3,125 into 14%, that is equal to 437.50. This 437.50 is included in the lease payment 2,250. We made that payment on 1/1/2018. Then payment towards net investment 2,250 minus 437.50, that comes to 1,812.5. Then balance outstanding is equal to 3,125 minus 1,812.5, that comes to 1,312.5. And in the last year, 31st December 2018, we found out interest as a balancing figure. We know our total financial charge, total interest payable 3,250. We deduct the interest up to this date 1,750 plus 875 plus 437.50. From this 3,250 we get 187.50 as a balancing figure. In the last year we take interest as balancing figure. Lease payment 1,500. Actually this is the residual value we paid on 31st December 2018, is 1,500. Then payment towards net investment is equal to 1,500 minus 187.50, that comes to 1,312.5. So our balance outstanding in the last year and the payment towards net investment both comes to 1312.5. We have no balance outstanding. Then thirdly, we compute depreciation. We know depreciation, rate of depreciation 40%. We compute depreciation under written down value method. On 31st December 2015, asset value 30,000 into 40%, that comes to 12,000. 12,000 is the amount of depreciation chargeable on 31st December 2015. Then our balance of asset reduced to 30,000 minus 12,000, that reduced to 18,000. Then depreciation on 31st December 2016, 18,000 into 40%, that comes to 7,200. Then our balance of asset reduced to 10,800. Then depreciation on 31st December 2017, 10,800 into 40%, that comes to depreciation 4,320. Then asset balance reduced to 6,780, that is 10,800 minus this depreciation 4,320. Asset balance reduced to 6,780. Then depreciation on 31st December 2018, 6,780 into 40%, that comes to 2,592. Then we go through our journal entries. On 1/1/2015, our first journal entry, leased assets account debtor 30,000 to lessors account. We know here we record the leased assets at its fair value or at its present value of total lease payments if less than fair value. So we used this 30,000 here. Then on 1/1/2015, for our first installment, our journal entry, lessors account debtor 17,500 to bank account 17,500. Then on 31st December 2015, for recording finance charge, our journal entry, finance charge account debtor 1,750 to lessors account 1,750. Then on 31st December 2015, for recording depreciation on leased assets, our journal entry, depreciation account debtor 12,000 to leased assets account 12,000. Then on 31st December 2015, for transferring this finance charge and depreciation to P&L account, our journal entry, profit and loss account debtor 13,750 to finance charge 1,750 to depreciation 12,000. Then on 1/1/2016, our second installment, journal entry for it, lessors account debtor 8,000 to bank 8,000. Then 31st December 2016, for recording finance charge at the end of the period, journal entry, finance charge account debtor 875 to lessors account 875. Then on 31st December 2016, for recording depreciation, depreciation account debtor 7,200 to leased asset 7,200. Then on 31st December 2016, for transferring finance charge and depreciation to profit and loss account, journal entry, profit and loss account debtor 8,075 to finance charge account 875, depreciation 7,200. Then on 1/1/2017, for our third installment payment of lease, journal entry, lessors account debtor 4,000 to bank account 4,000. 31st December 2017, for recording finance charge at the end of the period, finance charge account debtor 437.50 to lessors account 437.50. Then 31st December 2017, for recording depreciation on leased asset, depreciation account debtor 4,322, leased asset 4,320. 31st December 2017, for transferring finance charge and depreciation to our profit and loss account, journal entry, profit and loss account debtor 4,757.50 to finance charge 437.50 to depreciation account 4,320. Then on 1st January 2018, our fourth installment payment of lease, lessors account debtor 2,250 to bank 2,250. Then on 31st December 2018, for recording finance charge, journal entry, finance charge account debtor 187.50 to lessor's account 187.50. Then on 31st December 2018, for recording depreciation account debtor 2592 to lease lessor's account 2592. Then on 31st December 2018, we transfer our financial charge and depreciation to profit and loss account debtor 2779.5 to finance charge 187.50, then depreciation account 2592. Then on 31st December 2000, residual value of our computer 5%, 30,000 into 5%, that comes to 1,500. So lessor's account debtor 1,500 to bank account 1,500. These are the journal entries recorded in the book of the lessee. Then we go through the journal entries recorded in the book of lessor. 1/1/2015 to record the finance lease assets as receivable from lessee. Journal entry: lessee's account debtor 30,000 to lease sales account 30,000. Then on 1/1/2015 to record periodic lease payment received, bank account debtor 17,500 to lessee's account 17,500. Then on 31st December 2015 to record a financial charge, journal entry: lessee's account debtor 1,750 to finance charge 1,750. Then on 31st December 2015 for transfer of lease sales to trading account, lease sales account debtor 30,000 to trading account 30,000. Then on 31st December 2015 finance charge transferred to P&L account, journal entry: finance charge account debtor 1,750 to profit and loss account 1,750. Then on 1/1/2016 for recording periodic lease payment received, journal entry: bank account debtor 8,000 to lessee account 8,000. Then on 31st December 2016 to record a finance charge at the end of the period, lessee's account debtor 875 to finance charge 875. On 31st December 2016 finance charge transferred to profit and loss account, journal entry: finance charge account debtor 875 to profit and loss account 875. Then on 1/1/2017 record a periodic lease payments received from the lessee, bank account debtor 4,000 to lessee account 4,000. 31st December 2017 record a finance charge at the end of the period, journal entry: lessee account debtor 437.50 to finance charge 437.50. Then on 31st December 2017 finance charge transferred to profit and loss account, finance charge account debtor 437.50 to profit and loss account 437.50. Then on 1/1/2018 to record a periodic lease payments received from the lessee, journal entry: bank account debtor 2,250 to lessee account 2,250. Then on 31st December 2018 to record a finance charge at the end of the period, journal entry: lessee account debtor 187.50 to finance charge 187.50. Then on 31st December 2018 finance charge transferred to profit and loss account, journal entry: finance charge account debtor 187.50 to profit and loss account 187.50. Then on 31st December 2018 amount of residual value received. At that time our journal entry: bank account debtor 1,500 to lessee account 1,500. These are the journal entries recorded in the book of the lessor. Then we discuss about accounting treatment in case of operating leases. Accounting treatment, operating leases. For operating leases, lease payments are recognized as expense on a straight line basis unless other systematic basis is representative of the time pattern of the user's benefit, even if the payment are not on that basis. I repeat, for operating leases, lease payments are recognized as expense on straight line basis unless other systematic basis is representative of the time pattern of the user's benefit, even if the payments are not on that basis. And second point we have to note, incentives for the agreement of a new or renewed operating lease should be recognized by the lessee as a reduction of the rental expense over the lease term. Then we discuss about journal entries in the books of lessee in case of operating lease. First journal entry for lease rental due to the lessor. Journal entry: lease rental expenses account debtor to lessor. Second journal entry for payment of lease rental. Journal entry: lessor account debtor to cash. Third journal entry for charging lease rent to profit and loss account, journal entry, profit and loss account debted to lease rental account. Then we discuss journal entries in the books of lessor in case of operating lease. First journal entry for income due from lessee, journal entry, lessee account debted to lease rental income account. Second journal entry for rental received from lessee, entry cash account debted to lessee's account. Third journal entry for income credited to profit and loss account, lease rental account debted to profit and loss account. These are the journal entries required in the books of lessor in case of operating lease. Then we solve one problem. X Limited lessor entered into an operating lease with Y Limited lessee to rent out an office premises at an annual rent of rupees 1,20,000 for a period of 5 years. The lease rentals are received at the end of each year. In securing the lease, X Limited spent an amount of rupees 1 lakh as commission. Give journal entries in the books of X Limited. Journal entries in the books of X Limited. X Limited here is lessor. Okay. Then journal entries in the books of lessor X Limited. Firstly, for recording initial direct cost commission, journal entry prepaid expense account debtor 1 lakh to cash 1 lakh. Second journal entry income due from lessee. Second journal entry for income due from lessee. Journal entry Y Limited debtor 1,20,000 to lease rental income account 1,20,000. Third journal entry for rental received from lessee. Journal entry cash account debtor 1,20,000 to Y Limited 1,20,000. The next entry for income credited to profit and loss account, journal entry lease rental account debtor 1,20,000 to profit and loss account 1,20,000. The next entry to record commission on straight line basis, our commission is 1 lakh, duration 5 years, so 1 lakh divided by 5, that comes to 20,000. Our journal entry commission account debtor 20,000 to prepaid expenses account 20,000. Then our last entry charge commission to profit and loss account, journal entry profit and loss account debtor 20,000 to commission account 20,000. I think the topics explained here with these problems is clear for all of you. We will meet again. Till then, goodbye.